What's going on, believers? Here with another live price commentary today. Actually, it's going to be the first of this week, but definitely wanted to make sure that I put at least one out. This week in particular was one where the art of stillness can be appreciated. So, with NFP last week and a shortened trading week because of Memorial Day, not much going on this week as far as the economic calendar is concerned. And next week, CPI, PPI, federal funds rate, unemployment, and other inflation related news all come into the marketplace. So that's what the focus is going to be today. But just giving you a second to read the risk disclaimer here, and we'll go to the economic calendar for this week. And so, like I was saying, not much. There was high impact inflation related news Monday, nothing Tuesday, Wednesday, and then Thursday, there's unemployment claims, and then there's nothing today for the US dollar. Into the charts. So, New York session model, my intraday trading model. And just to take a peek back of last week, like I was saying, as far as this was the opening last week, it opened up with this gap. And I've already outlined all of this and spoke about it before. This is what happened. Closed up here inside of this weekly liquidity void. And so I'll show you on a weekly chart what that is. That's this range here. Where there was no trading in here at all. No buying or selling. There's no candle bodies or wicks. That's what ICT teaches as a real liquidity void. And so this is the area that's shaded orange here on this 15-minute chart. Same asset class, E-mini S&P. And so the significance of this high, this buy side liquidity that was resting here, this was Friday's high. So it was a weekly high as well. And so coming into this week, where the yellow line is, that's where it opened. Work that level, take the buy side. So Friday's high, last week's high, but also left a little piece of that liquidity void unfilled. Down back to weekly opening price, and then runs that high, finally filling in the liquidity void. Immediately from there, running back to the low end of the liquidity void. Consolidation. All of this at the end of the day to me is consolidation. It's in hindsight a range. Look at this, just completely sideways, but lots of volatility. But again, I've already outlined the reasons for these types of conditions, and that's where the art of stillness being appreciated comes into play. Because not every day, not every week, in my opinion, is a good day to be applying risk to the market, to be trying to make money. Rule number one is capital preservation. I didn't understand that for a long time, but I also didn't understand how to anticipate these types of conditions. And experience is the best teacher, right? So the time, energy, and effort that I've been willing to put in has given me the ability to anticipate these types of conditions. And so that's why this high has been left here, just because it's significant to me because it was a weekly high. This high, or this particular black line here, is just the high end of that liquidity void. So again, I was talking about this in my midweek review about how perfectly tapped that level, and then there was another collapse lower running all of the sell side below these lows, and now there's this sell side left that was not able to be engaged yesterday. A nice rally, back up to that old weekly high. So Friday's high and last week's high. Lower from there to the weekly opening price. Trades above it, but does not get back to the high, the liquidity void. Lower again, back to the weekly opening price without taking out these equal lows. Right back up, almost to the level. Lower, and now what we're seeing is it's engaged this buy side and is reaching higher, potentially to tap the high of the weekly liquidity void for a third time. Over here on the dollar chart, just going to the daily. This was in my weekly outlook video. This 103.308 level. I want to see the dollar will show strength above this level. So the dollar, this was Monday. So the dollar opened here. This does not look like strength to me, but you be the judge as far as what I outlined here. And so it makes 100% sense to me according to the conditions I was anticipating based on the fundamental events that happened last week, the lack of them this week, and what's upcoming next week. And so, although it did show weakness here, I do like how we like traded into and below that level, but closed above it yesterday. And today, since has shown willingness to trade from that level, it's worked its way back down about halfway in the range right now. And so how today closes will be significant to me. But those are just my observations for now. As far as today, I do want to see if I can find a setup. So I will be using my time wisely here, taking advantage of live price action and just allowing myself the opportunity to gain further insight about the markets, about Friday in particular, and Friday of a week that's like this, which could be defined as seek and destroy type of conditions, or just of very volatile and choppy consolidation. So this low here that's also noted was this sell side. And so I also have that level identified. It traded to and through that level, hit that support that I'm looking at as far as make or break, as far as bullish dollar short term. Accumulation down there, rally, lower again, running sell side. So at this point, if the dollar goes lower again, I'm completely uninterested, which means that this may find its way working up towards this buy side liquidity up here, the 43.82 and 3/4 level. That's what I would be anticipating for the E-mini S&P is further upside if the dollar takes out this low. But that's not something that I'm willing to engage today. Like I said, there's a lot of catalysts and things like that tomorrow. I'm not going to really allow myself on a Friday to entertain the idea of a 80 handle move on E-mini S&P when the week has been like this. Not saying it's not possible. If I look at last Friday, for example, that was a nice 60 plus handle move, but it was also NFP Friday after all of the price action that had taken place for the week already. So just want to hover over this. The high 4304 and 3/4. So once again, it has perfectly tapped that level and shown some sensitivity before getting through it, if it's going to get through it. But as far as the New York session model is concerned for today, buy side has been engaged. So now I'll drop down to my 5 minute here and I'll wait to see some sort of opportunity present itself if there's going to be one. And so, like I said, as far as dollar, very simple. If it comes down and takes out this low, which is 103.325, then I am completely uninterested in anything today. When typically on Fridays I'm not anyways, but just literally completely uninterested, ready for next week. But I'll drop down to the 15-minute on the dollar to be able to see a little bit more details of what's going on. And then got the 5-minute up here on E-mini S&P. And so at this point, I'll go mute. You know the drill. I'll talk to you in the sped up version. So speaking with the benefit of hindsight, there's not really much for me to include as far as the voiceover. There are some things that can be learned in the next few minutes of this video as far as specific characteristics of price delivery that were obviously seen today on my end, and most of the notes are pretty much on cue like that, with the volatility coming in with the 8:30 opening, a nice push immediately. So anybody that was looking to be a seller at the high end of that range again has been punished with that push higher there. But as it's retracing here on the lower time frame, someone that trades the 1 minute chart, for example, could have seen that as the turning point and engaged in sales there, putting the stop loss at that most recent high created. And so I'm just taking note of that, right? And just being aware that there's buy side liquidity resting above there now because of that on a smaller time frame. And as far as the 5-minute perspective, there was one setup that I would have felt comfortable paper trading, not even anything I would have done live, but would have felt comfortable paper trading that. So I had the setup ready, and that was the only thing that was of any interest to me. Keeping track of the dollar over there as well, the current range from high to low on the 15-minute chart there, sell side at the low, buy side at the high. So any willingness to get to the low end of that completely takes my interest out. And then possibly if it can get to that high and then engage the buy side up there, it would allow, hopefully, that's what I was thinking, right? Allow hopefully for even the S&P to then retrace down into the 5-minute entry level that I wanted for the paper trade, and then just targeting the recent high that it created for the day. Again, with the understanding that anyone looking at that on a smaller time frame, forcing sales is going to place their stop loss at that high there. And so those are just my thoughts. But again, speaking from the benefit of hindsight, this thing is just continuously running higher. And notice on the 2-minute chart, those series of down close candles, look at how price expands through them when it goes higher. So those are levels that, to me, could be identified as bullish order blocks. And so these types of days are why I started to become interested in trading Fridays. But I do have to admit that I'm very skeptical still. So that's why it's good to have rules, and it's good for me to not have FOMO, fear of missing out, because there's no reason for that. This is every day, every week, and it won't stop. But shout out to the believers. I'll catch you on the next one. Peace.